Yo, what is up, guys? It is Eric, and today I'm super excited to be exposing and sharing my three-step strategy, which takes at most only an hour per day to trade and can easily make you over $10,000 per month. So today is actually Christmas. So Merry Christmas to you, to all that celebrate, and I hope you all got some great presents today. But by the time you're watching this, it's probably not Christmas anymore, but this video is going to be my completely free gift to you guys, and I hope that this can really change your trading forever and that you find a lot of value out of this. So without further ado, let's get right into it. If you guys don't know who I am, my name is Eric. I'm currently a college student studying data science, and I'm funded with over $250,000 in funded trading capital. And no, I'm not some random guru. I'm a guy who's sharing what has actually worked for myself. So you can see I've gotten payouts like these, and these, and I've helped hundreds of students get insane payouts and insane winning days, with one guy even making over $20,000 in a single day. I'm gonna also show you a quick clip of me executing my strategy live and hitting take profit in my Discord, which I stream every morning from 10 to 11. $1,500.
Holy moly!
Oh my god, that was, I'm not gonna lie, chat, that was a tough one to hold. So before I get into what the strategy actually is, first I'm gonna tell you guys what you guys need to know before you even do the strategy, and also what the strategy actually requires. So first, what you actually need to know for the strategy in terms of knowledge, you'll need to know all of these concepts like candlesticks, time frames, limit orders, fair value gaps, liquidity, all of these other points of liquidities, how reversals in the market can happen, indicators, risk management, strategy, and psychology. But if you don't know these that well yet, that's completely fine. I still recommend watching this whole video through just so you can get and understand the strategy, and then start to work on learning these after. Let's get into the strategy now. The three-step strategy is what I personally use to make over $10,000 in profit every month, and it takes less than an hour to trade every day, and on most days you're going to have a trading opportunity. So to summarize the strategy, we're pretty much just following the trend, or we're looking for a reversal and following the new trend off of that reversal. So what exactly are we trading? So there's two different trading instruments that this works on, which is futures, the first one, and the second one is Forex. And this can work on other trading instruments such as crypto and stocks, but I haven't really tested on those, so you have to do your own testing. But I personally trade futures on specifically ES, the S&P 500 futures, but this also works really well on NASDAQ. And it does work on Forex, but I recommend if you are a beginner trader or someone who's just struggling, just do futures. Trust me, it's easier. And so when exactly are we trading? So this strategy is actually time-based in a way, so you're going to be trading at the same time every single day. So there's three different time zones that you can trade. The first is 3 to 4 a.m. Eastern time. The second is 10 to 11 Eastern time, and the third is 2 to 3 p.m. Eastern time. I only trade the 10 to 11 Eastern time just because that's like a good time for me, and I find that to have the most, I guess, potential profit. But these other options are also good if you aren't able to trade during this time, like if you have classes or if you work a job. But the reasoning why these hours are the way they are is because for 3 to 4 a.m., that's actually when the London session and Asia sessions overlap. So you have two sessions trading and a lot of volume, and thus you can get good trends during that time. And the second is 10 to 11 a.m. So you get to avoid the first 30 minutes of the New York Open, which is at 9:30. And there's also news, economic news that releases at 10 a.m. And there's also a new 4-hour candle, as well as London session overlapping with it. So you get both people from Europe trading and people from the US, and that gives a lot of volume and volatility in the market. And the last one is 2 to 3 p.m. Eastern time, which is when you have another new 4-hour candle, and sometimes 2 p.m. Fed news, like interest rates and things like that. And yeah, trends during this time is also very high, as well as volume. So what the strategy is, as you can tell by the name, it's the three-step strategy. it's 3 simple steps. The first step is to, 1, identify the draw and liquidity. So you're essentially deciding where price is going to go, and I'm going to get into that. The second step is to enter off of a fair value gap, inverse fair value gap, moving average, or off of the VWAP indicator. And you're going to want a minimum 2-to-1 risk to reward. But a 1-to-1 risk to reward is acceptable, but you would usually want 2-to-1. And then after you got your entry, then step 3, just hold your take profit or your stop loss. And stop to break even is also optional, but I'll get into more detail of each one of these steps. So let's go to the first step. First step is the draw and liquidity. So what exactly is the draw and liquidity? Essentially what it means is that price will want to reach for these certain levels, and also known as liquidity. So price will want to reach from to fill those imbalances in the market. So essentially what we're doing is determining bias. Is price going to go up or is it going to go down? And this step is the most important part of the strategy, and it's even more important than step 2, which is the entry, because you need to know where price is going. So you need to know if it's going up or going down. And if you don't know which direction it's going, you're not going to be able to make a profit. So the best way to identify where the draw liquidity is, so where price is going to go, is to gain screen time on the charts. Essentially what it means is backtesting, which is looking at old market data, and then just studying the charts, just looking at the candles move and just getting hours of experience, as well as paper trading, because you're practicing trading, so you'll get more experienced as you do it. And so the question going into each day is that, is price going up or down, and where is it going? And there's certain things that price is going to want to go. So there's buy side and sell side liquidity, the session high and low, the daily candle open high low close, the higher time frame fair value gap, and then the regular trading hour gap. And I'll show you guys examples of each of these. But essentially, you're going to want to identify where price is going by using either the trend or seeing that if it hits like a certain point and then reverses off of it, and then you'll want to see where price is going to go. So I know that explanation was probably not the best and a little confusing, but I think it'll make more sense when I show you some examples. So sell side and buy side liquidity. If you guys don't know what these are, sell side liquidity is essentially like a low or like support, and buy side just like resistance or like previous highs. But point is, right, coming into this 10 to 11 a.m. Time frame, we can see prices running up, and then we identify that there's this sell side liquidity down here that hasn't been touched, and we can see we start getting some bearish reactions here, right? We have bearish fvgs, and I believe during this day there was 10 a.m. news. So this is a trade I actually took, so I shorted with my stop loss at around 4 points and my take profit all the way at sell side liquidity, and we can see we came down and took out this low. And then so in this example it would be like a short, and in this example here it would be looking for a long. So we see we have buy side liquidity up here. I believe this is around the London high as well. They're kind of a little bit interchangeable, but you can see we draw this high up here, and we can see coming to the open we're essentially pushing upwards. Obviously this is not a full analysis, but we can see price is obviously in an uptrend, and we have a bullish fair value gap here, and we can enter off of that and target this buy side liquidity. We can see price comes up and takes it. So with these points of liquidity, you can think of them kind of like as magnets. So like price will be attracted to them. So the next example is session highs and lows. So here's another example down here where you can see price is moving down before the New York open, and then when it opens it starts pushing upwards, and we get signs of a reversal. So that includes inversing all these bearish fvgs that form, as well as like a market structure shift, and we break above these old highs and get strong closes above them. But we can see we draw our London high from 3 to 4 a.m. around that time. Well, you can see the sessions here. So London sessions 3 a.m. and 11 a.m. So we can see we have this obvious high here. We draw it here, and as we're trading that 10 to 11 a.m. window, we'd be looking for longs into the London high, or even just buy side liquidity. So here you could just take a long off of pretty much anything and target either this high or this high up here. So right, this is essentially like our magnet. So going into the day, it would look like something like this, and we have these highs that we want to see price hit. So that would be our drawn liquidity, right? So we'd be attracted to it. It acts like as our magnet. So we would press buy, and then we can see price comes up and takes out those points of liquidity. And then for session low, right, it's just the opposite. Instead of buying into the session high, we want to sell into the session low. So we can see here we have this London low, right? London's 3 a.m. to 11 a.m. So we draw this this low, and we can see price is running up right before New York open. I believe there was economic news on this day around 9:45 and one at 10 a.m. as well. But we can see we've identified that there's probably going to be a reversal around this area, right? We break under these old lows or these higher lows, and we have a bearish fair value gap formed, and we can see that because we essentially get a reversal, we want to target shorts. And right, where's our drawn liquidity? This London low. So if we want to short, we just short here and target this low. So it looks something like this, and you press short, and you can see it goes straight to our drawn liquidity. And one more thing I'd like to add is that you can actually identify where price is going to go like correctly most of the time, but sometimes what can happen is you have the right direction and exactly where price is going to go, but if you get like a weird entry, sometimes price can go up and stop you and then proceed to go down to the drawn liquidity, which is unfortunate, but that is a part of the strategy. Yeah, let's look at the next example, so which would be the daily candle open high low close, and we can see here that you guys probably noticed this candle already, these previous examples, but this is actually the daily candle. It's an indicator that you can add on TradingView, which is called PO3 by 2 degrees. So if you just go on TradingView, indicators, community, you can just type this in and you'll find it. But yeah, essentially it's a daily candle. It'll show you the high of the day, the low of the day, as well as the open and close. So in this example, we've identified our reversal, right? We get these bearish price action, and we'd want to take shorts, and our drawn liquidity, well, it could be this London low, but we can see there's also a daily low that we could potentially target as well. And right by the daily candle looks like this. It looks very bullish, but we've already identified there's a potential reversal. So as we're taking short, our idea is that we want it to take out this daily low, because that is our drawn liquidity, right? It's acting as our magnet. So this is the before image. Now let's see the after. We can see price pushes straight down pretty much and takes out that low, and actually even continues even lower. But if you guys already know about buy side and sell side liquidity, you'll know that every time we hit one of those points, there's potential for a reversal. So in this specific case, yes, it did trend downwards, but it could also just hit this and just start reversing and actually moving upwards. But so that's essentially where we want to put our take profits, our safe take profits. Basically, we put that at the sell side and buy side points. And this is another example of the daily high. The OHLC stands for open high low close. So we see something like this, and there was actually 8:30 economic news, and you can see it's an obvious uptrend, and right, the daily candle looks very bullish. So what can we expect to happen in a day like this where we get economic news and the trend is very strong to the upside? We can simply just follow the trend and expect the daily candle to keep breaking above those previous highs. So right, probably here during our 10 to 11 a.m. trading session, we probably want to take a long. So let's take a look at what happens. And we can see it continues upwards, and right, look at the daily candle. It's very bullish, and you can see we broke above all of those previous highs and are just making new highs. So as I said earlier, this strategy is pretty much just following the trend or finding a point of reversal and following that new trend formed after. It's really that simple. And another example here. This is a higher time frame FVG. that we could use as our draw liquidity. So if you guys already understand how fair value gaps work, you know that they're imbalances and that they like to be filled. So in this case, we have a bearish FVG up here. It's both in 1 hour and 15 minute. And coming into the 10 to 11 a.m. Trading window, we can see price has moved up, and it's getting pretty deep into this bearish FVG, but we can see later that price starts pushing up. It eventually disrespects this bearish FVG. I believe this is actually on the 15-minute time frame, so we can see, right, we disrespect it and we get a market structure shift, so we can reasonably target the 1 hour and 15-minute bearish FVG as our drawn liquidity. So going to this day, we would look for some sort of like disrespect, showing us that market wants to reverse, and then we would take a long, targeting that 1 hour bearish FVG, this rectangle up here, and we can see it comes up and right, take profit would have been hit. Let's look at the next example, which is the regular trading gap. Essentially what this is in trading view, if you go to the bottom right, you'll probably notice for futures it says electronic trading hours. So if you go to ES, the red 500 symbol, and then look in the bottom right, it says ETH or electronic trading hours. If you click that and switch to RTH, it's going to show regular trading hours. That's what it stands for. And that only shows from 9:30 a.m. to 4 p.m. So pretty much only the New York session. And that's different from electronic trading hours because electronic trading hours is 24 hours. But we know that futures trades pretty much 24 hours a day, right? So since we're only showing 9:30 to 4, we're going to get gaps in the market from the 4 p.m. close and the 9:30 a.m. open. So we can see here, this is a 4 p.m. close, 9:30 a.m. open. We push upwards and we get bearish price action, and we do actually break under this low. It's not very strong close, but if we get some confirmation, we could pretty recently look for shorts to fill this RTH gap. So we can look here and look what happened. We break under this low and start pushing downwards, and eventually we fill this regular trading hour gap. So that would also be another point of drawing liquidity that we could have. And notice how like the daily candle is bearish, right? We're catching that downward momentum and that downward trend. But the last one I'm going to show you is the data low. So essentially, if you guys don't already know, 8:30 a.m. has economic news that releases pretty consistently, and it's usually going to form some crazy candle like this, right? You can see there's like this crazy high, crazy low. Now in this specific case I'm showing here, it wasn't exactly at 8:30. Usually you want the candle to be exactly at 8:30, but again, this is like the low and highs formed from the data release, so we can just also mark it as sell side liquidity. They're pretty much identical. So right, we would draw this line here. We can see we have a 5-minute bearish FVG that we're pretty much consolidating in, but we never disrespect it, and we do get like a fake move upwards because of 10 a.m. news. And this trade here, we identify this sell side liquidity as our drawn liquidity because we had this bearish FVG. So right, we're getting a lot of bearish signals and we think it's going to go down. So where do we target? We target sell side liquidity. So we're just following that trend downwards. So we short, and look what happens. Price hits that sell side liquidity. And I also believe it makes a new low of the day as well. So that's why we have this very red daily candle. And with the data high, right, it's the same thing. So this wasn't exactly at the 10 to 11 a.m. window, but we can see we get this very bullish candle from the 8:30 news release, and you can see that price, it does start to consolidate here, but with our drawn liquidity, right, we want to follow the trend. So what would our target be? It would be the high of this candle, which is the data high, which could also be considered buy side liquidity. And look what happens. We hit the high and we continue trending upwards. So drawn liquidity is the most important step, because if you don't know where price is going to go, you're not really going to be able to profit off the moves that happen in the market. The second step of the strategy is simply the entry. So once we determine the first step, which is the drawn liquidity is going to be either bullish or bearish. So if we have buy side's like up here and price would be down here. We would want to go for longs for price to go up and hit that buy side liquidity. So we'd be bullish, right? And if price was up here and we determine that we're bearish and we have sell side liquidity, then we want to enter short and we expect price to go down and hit that point. So once we determine whether we're bullish or bearish, we're just going to enter off of something that is essentially matching our bias. So you can enter off of the fair value gap, which is can be the 1 minute, 3 minute, 5 minute, or 15 minute, or even like 30-second. It doesn't really matter. And you can also enter off of the 9 moving average. If you don't know how that works, it's pretty much like a line that acts as support and resistance. So every time we touch it, then like in this case, right, you can see it's an obvious bullish trend. If we touch that 9 moving average, you can just buy off of it. You can use other moving averages as well, but I've just found 9 to work pretty well for me. And you can also use VWAP as well. It's another indicator to look for entries. So anytime you enter, risk to reward should be above 1-to-1, but I recommend having at least a 2-to-1 risk to reward ratio. And if you guys don't know much about risk to reward, I'm gonna make another video on that, but essentially what you need to know is that if you have a very good risk to reward, like 2-to-1 or 3-to-1, you don't even have to be right like more than 50% of the time and you can still make money. So in terms of stop loss and take profit, I always have a fixed stop loss of 4 points, but with this strategy you can also just have it be dynamic. So you could just put it at an invalidation point. So this can include like a stop above like an old high if you're shorting, or like if you're trading entering off the fair value gap, you can just put it under like either the second candle or the first candle. But what I do is the 4 points fixed. Through my back testing, I found that that has worked best for me for both in terms of maximizing profit and also in terms of psychology. But I recommend back testing to find out what works best for you. And then if you want to put your take profit, you want to put it either at around 8 to 10 points or at the drawn liquidity. And it'll depend for you, but I recommend you to backtest and figure out what works best for you. When you guys are trading this strategy, make sure you only take at most 1 to 2 trades per day. So if you win your first trade, then you're not going to trade again that day until the next day. But if you do lose that first trade, you can take one more trade, and if that's a win or a loss, you're going to stop trading for the day. Even if that means you lose 2 times in one day, you're not going to trade again until tomorrow. That way you have consistent rules and you will be able to stop yourself from over trading. Now on step 3, it's pretty much the easiest part. You just hold your trade to take profit and stop loss. So right, that's going to be either 8 points or 4 points. Oh yeah, these points are on ES, so the S&P 500 future, by the way. And remember, when you like enter, you always want to enter with like the long and short position tool in TradingView. So basically you want to enter with a stop loss and take profit every time. So some common questions are, should I exit early? Usually no, but I would exit if price starts consolidating for a long time. And should you move stop to break even? I would say if trend is like heavy, like the day has a very strong trend and it's like very obvious, and you know that price doesn't really have a reason to return back to your entry point, then I would move stop to break even. And should you take partials? I personally don't trade partials, but you can take some off after around 5 to 10 points and let the rest run to try and capture that trend of the day. But all these questions are going to depend on you, so I recommend just trying different things out and seeing what works best for you through backtesting. So again, to summarize the strategy, we're essentially just following the trend or looking for a reversal and following the new trend formed. Now here are some tips for you when you implement the strategy, and this part's really important, so do not skip it. This part will turn you from a broke, unprofitable trader to someone who's consistent and able to print money from the markets. So listen closely. And this is advice I wish someone told me like 2-3 years ago. So first, stick to one trading instrument and one strategy. do not strategy hop. So after you've found like a trading strategy, just stick with it. And just because you get like 3 to 4 losses in a row, it doesn't mean the strategy doesn't work. What a lot of new traders do is find a new strategy, maybe get a win streak on it, but then get a few losses in a row. They're like, oh no, the strategy has stopped working. And then they just abandon that and move to a new strategy. There's no perfect strategy like in trading. It's honestly just like sticking to one and making it the best like refining it so that it is the best for you. So you're gonna want to stick to one trading mission and one strategy. And for me, that would be only trading the S&P 500 futures, so ES, and only one strategy, which is this one. And then you also want to backtest your strategy a minimum of 1 year and collect data on like Google Sheets. And there's 2 reasons why. The first is that it ensures you actually have an edge in the market. So if you have that 1 year of data and it shows you that the strategy can make you money, then there's a good chance it'll continue to be able to make money for you. But if you're just like looking for some random strategy off YouTube and you just start trading it live immediately, like you don't know if it's actually going to make you money. Just because the guy in the YouTube video said it would doesn't mean it's going to for you. And it also help you in terms of psychology. That's my second point. So your loss streaks are inevitable, and also you're going to have to hold your position to full take profit in order to take advantage of risk to reward and the concepts of where winning trades eat your losing trades. So if you have that 1 year of data and you know that the strategy will make you money in the long run, you're not going to care about the wins and losses each day and even every week. And I also recommend forward testing, so paper trading a minimum of 3 months before using it on a funded or live. So if you can't even trade with demo money profitably with this strategy, how can you expect to trade profitably with a funded or a live account? It just doesn't make sense. And it also doesn't make sense to just go ahead to jump to the funded or live account when you don't even like have the experience with the strategy. So yeah, make sure you backtest and forward test. And I can't emphasize this enough, because a lot of people, they'll find a strategy, get excited, and hop immediately on the funded or live account, and then they'll have problems with actually knowing that they have an edge in psychology. It just gets messy. Just before you actually start trading real money, you want to make sure that you have an edge in the market, pretty much. Fourth tip is avoid being in a trade when red folder news is released. So you can find this on forexfactory.com or just look up economic calendar. When the news gets released, price gets very jumpy, so it could easily trigger your stop loss and even slip you sometimes. But with futures, that's not really a problem. Fifth tip is that win rate, yes, it is important, but a high win rate does not mean you're going to make more profit. So you shouldn't hyper focus too much on your win rate. What actually matters is your actual raw profit or points being generated through the strategy. And sixth point is that you'll quickly gain experience by doing the same thing over and over. So for example, for me, I trade ES at 10 a.m. pretty much every single day, and I've even looked at backtested data or like old market data through backtesting and can pretty much recognize where price is going to go in like seconds, just like that. Versus if you have someone who's trying to do like forex, crypto, stocks, and just try to like make a random trade on those every day, who do you think is going to be more profitable or like be able to tell where the market's going to go? Probably the person who has spent more time doing one single thing than trying to do multiple different strategies and multiple trading instruments. But yeah, those are my tips. And let's look at some data for the strategy as well. So we can see here it has an 86% win rate with a 1-to-1 RR, and then a 65% win rate with a 1-to-2 RR. And then if you have a price target or take profit at liquidity RR, you can see it has slightly lower win percentage but slightly more profit. But based on looking at these, this is why win rate is not that important. We can see that as we increase the RR, the actual money or raw points you make from the trade increases. So we can see with a 1-1 RR, it's only $5,000, but 1-2 or 2-1, you get 7,000. And I've also found out what the max loss streak is for my strategy. So when I go into like a trading day and I've lost like 3 trades in a day, I usually take max 1 to 2 trades a day. So if I lose 3 trades in a row, I'm not going to be stressing, right? Because I know that this is normal. It's like a part of the strategy because I have this data to tell me that it's happened before. And this is just more data here of me live trading. This guy Mitch, shout out to him on Discord, actually made a nice little graph showing the strategy and how it progresses from $0 to like what I think like 17,000 in around 1.5 months. And then this is also more proof on my Top Step Express account. I made close to 10,000 in 1 month on just this account alone. And yeah, that's pretty much the strategy. And I do also want you guys to be aware of my free trading community. So for me, learning trading was super confusing in the beginning. There's gurus, confusing information, and scammers online. I'm sure you're already aware if you're watching this video. So I decided that I'm gonna change that, and I'm gonna be building the best and most transparent trading community. So it's currently on Discord. I think we have like 1,600 members, and yeah, I really want to help you guys out. So hop on the Discord. I'll link it in the description of this video as well. But you can go over to the questions channel. Just ask me any questions you have at all, with anything trading or just like anything in general. And then I also have more free resources and like a PDF of the trading strategy, broken step by step. And you can also see all my live trade recordings and recaps for free. So I actually trade every morning 10 to 11 a.m. with my premium community. So I show them my exact entries, stops, and take profits. But even just being in the free community, you can watch the recording of my live trading, just get so much value out of that because you can see me execute the trade. As well as just like being able to see the exact trade I took through that day. And if you're in the premium community, you can also get one-to-one access with me. So we will have a Zoom call every month, and you can also just message me anytime. And yeah, you would actually get to know me, and I get to know you, and I can help you out personally. And I also have education as well, so 6 hours of A to Z, no BS trading videos, plus quizzes and tests, so you can actually test your knowledge and know you're actually learning something, than just like sitting there and just watching through videos. And yeah, we're just a thriving community of traders. Like we're all hungry to achieve big goals. And together you learn, grow faster. I think there's like a study where it's like if you're in a community with other people doing the same thing as you are, you learn 10 times as fast versus just yourself. So yeah, if you want to learn from other traders who trade different things or even are just like in an even better position making more profits, then definitely join up on the community. And we even have in-person meetups. So I think like next year we have a meetup in Miami as well. So yeah, join the 7-day free trial. You can find it here, and it's completely free, and if you don't like it you can just cancel. But I'm sure that after you try it you're gonna love it, and I'm always trying to make this community better. So feel free to tag me in general with your trades or with any questions, and I'll be more than happy to help out. But yeah, this is the entire strategy, and this is all. It probably all seems very confusing at first if you're not familiar, but give it time and especially practice the first step, which is the draw on liquidity, as well as these concepts I mentioned here. And if you really stick through this, it can really like do something for you. So with that, I'll see you in the next video.